And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to another Wealth Within update. My name is Jim Beach of School for Startups Radio, and I am joined, as always, by Dale Gillham of wealthwithin.us. It's the first Monday in May. Dale, how you doing? Good to see you again.
Yeah, you too. It is really good to see you again, and things are looking a little bit more positive around the world, with things opening up a little bit. So looking forward to getting out in the fresh air a bit more.
All right, I want to start with this. I know that April was the best month since 1986, I believe. Unbelievable. For, I think, 30% of America, April was the worst month of their lives, perhaps. The disconnect is just so hard for me to accept. The stock market is so detached from the reality that so many people are living. What do you think?
Oh, 100%. Absolutely 100%. There's zero reasons why the S&P and Dow should have risen so strongly. You know, it's just like, I mean, the Dow was over 8% up last month and the S&P over 9%, in a month. And they're massive, massive moves, completely unsupported by financials, basically. It's like you're talking about an area or a month where there is so much uncertainty, not just from a health point of view, but I'm talking about how the coronavirus will affect businesses long term. Now, we are seeing data coming out, obviously, hasn't been as bad in terms of the first quarter reporting, which we'll probably talk a little bit more about in a minute. But most of the first quarter was all good anyway before we went into lockdown. I mean, lockdown only happened 4 or 5 weeks ago, so I think there's a huge disconnect, with reality and the market. And I think there's a lot of people speculating, thinking that's going to be like a normal sort of flu type of thing, and it's all going to be over and everything's going to be normal again next week, and businesses will get back to doing what they were doing, and everybody will get their jobs back. And seriously, I don't want to use this word, but I think there's a lot of people in a delusional state right now of how enormous this impact will have economically around the world, and the ongoing effects economically over the next 1 to 2 years, even more, with the way business is changing and things have changed. So, yeah, a bit strange.
All right, so Dale, I know we had a huge week with earnings reports. What did we see? Were they what we expected, a little better, a little worse? What happened?
Well, earnings season so far hasn't been a real sort of disaster. It's actually been quite good. We've had nearly 300 companies in the S&P 500 report to date. I mean, that's roughly 2/3 of all companies have reported. But and the earnings have been above analyst expectations, but not by a lot, but they have been above it. I mean, information technology and consumer staple sectors have performed well, and that's to be expected. Information technology, I mean, obviously with the lockdown, everybody's buying a lot more computer gear and things to work from home. But the big issue I have, whilst companies are reporting, they're not giving any guidance as to what the next few quarters are going to be. And maybe this is, they're putting all that in the too hard basket right now, because nobody really does know what's going to be happening when they start opening up. Do we get a second wave of the coronavirus? And that's where I think a lot of companies are being very, very, very cautious. But when we look at that, 11 stocks in the S&P 500, they're still up 20% this calendar year. So there's some good stocks holding up very, very well. I mean, Goldmine and Newmont, that's the best. It's up 40% so far this year. And biotech company Regeneron Pharmaceuticals, that's up 39%. Citric and Netflix are still up 28% to round out the top four. And there's quite a few more in up 20+%. So they're holding up very, very well. But biggest issue I have at the moment is that analysts don't know what's going on. You've got the gap between analysts, the more positive and more negative, is massive. And so we're all speculating on what might happen and what the results could come out in the second quarter. And basically nobody's got much of a clue, and that's the real challenge right at the moment. And as we mentioned a second ago, there's a disconnect between the market and actually what all the fundamentals are and what companies are earning, and that makes a dangerous, very, very dangerous market, because you've got people speculating on the rise and pushing it up so heavily, much more heavily than it should have been, and nothing supporting it. And you know what, something goes up on hot air, it's going to come down soon. So that's what worries me a hell of a lot at the moment. And I don't think I'm the only analyst at the moment that's worried about the Dow and the S&P and worried about a second wave pushing down harder. But right now, nothing too much, as I said, on the earnings front. They're not giving us much of an idea, which is even more concerning.
Well, Dale, I'll tell you, I am at the epicenter of the reopening. As we talked about, Georgia, our Governor Kemp, we're one of the very first states to open. Our tattoo parlors are buzzing right now as we speak. But I'll tell you, we started the restaurants 2 days ago now. The restaurants are open as well. And my wife went to pick up some takeout food, and the restaurant was full. She said it was as full as it could be. And the people were doing the social distancing, and there were masks and new disposable menus and all of that. But from what I can tell, Americans are dying to get back and do all of the fun things again. I just feel like there's a huge pent up, not only as we've been talking about computer demand at Apple, but demand for olives as long as I can eat them outside of my house. I mean, I feel like if Georgia's any indication, the rebound could be the V instead of the U. What do you think when you hear data like that?
Look, I think a V-shaped recovery is not out of the question. I just don't think the downward moves happened or physically happened enough yet. And as I keep saying to you, I believe probably 80% of the downward moves already happened to that March low, possibly 90%. I don't think it's all over yet, and I think, we're seeing a lot of people dying to get back out, obviously, as you're mentioning. But you only need one person that's got the coronavirus to come anywhere near that, and the whole restaurant gets it. So, and we always know viruses come in waves. We've had the big one wave. Is there going to be another one, and what will happen? So again, it's still in Australia we're being very, very careful right now at the moment about opening up, and we're looking like we're easing restrictions mildly in a few states, but in the next couple of weeks they'll open them up a little bit more. But again, while some of those anecdotes and some of the things that we're seeing at the moment do look a bit more positive, I'm being a pessimist right now because I know the market is just dangerous right now based on what I'm seeing. And whilst, hey, it was great news that the S&P and the Dow were up so much, I just think it's not all over yet. And, as they say, it's not all over till the fat lady sings, and she's not even warming her voice up at the moment in my book.
Another one of the industries that we need to be watching is the cruise industry. They had a very volatile week last week, up substantially. Again, were they up, do you think, on some good old irrational exuberance? And then they crashed, of course, on Friday. Talk to me about the cruise industry.
Yeah, this one really, really had me. I'm thinking, why the hell would anybody be looking at getting into cruise lines? Like, right at this point in time, like, they have been the disease carriers of the world. Like, seriously, especially in Australia, like, one cruise ship alone, it was responsible for a big chunk of Australians' infestation. And there's going to be a lot of big lawsuits. There's a big class action happening in the US on Princess Cruises. There's a law action happening against Princess Cruises in Australia as well. So and that's going to affect them big time. But last week we saw new Norwegian cruise lines. They were up 27%. Carnival was up 16%, and Royal Caribbean cruises were up 14% last week. And all of those were in the top 13 stocks in the S&P 500 for growth for the whole week. yet all of them, as you mentioned, had big falls on Friday, and they still were up those amounts. So they had double-digit falls on Friday, and to me, there's going to be, what I'm hearing from a lot of people when I'm interviewing people across America, they're saying, well, even though we're going out, or we might be able to go out, we're still going to be careful about being close to people. And that's what you sort of said there, being at the restaurant, they were still social distancing, they were still masked. I'm never going to get on a cruise ship. You know, they are places for these sorts of things to really run rampant, because you're all trapped in one floating vessel with the same air conditioning systems in very close proximity. So I don't see them really picking up their revenues for some time yet, and there might be a lot of high demand for cruising in the coming year or two. So it really does defy logic to me why people are buying cruise lines at the moment.
And very similarly, airlines had a very bad week. Warren Buffett announcing that he had liquidated his entire $4 billion position in the airline industry. That's just horrible news when guru superstar Warren Buffett publicly kisses off your whole industry. I don't know how you recover from that, because that made not only the financial news, that made the Facebook news.
Yeah, look, when you're looking at the airline industry, they've always been stocks that are a little bit more high risk than most, because things with airline industry can be volatile at the best of times. Obviously, oil prices affect them. Things with travel and tourism, you only need, tsunamis or other natural disasters to cause people to not fly. Obviously, coronavirus pandemic is a huge one that's stopping people completely flying, and we've not seen planes over. I can't remember last time I saw a plane flying over my house, which is, it's got to be 4 or 5 weeks. So we're seeing a huge drop in that. So it doesn't surprise me Buffett's not getting into airlines. I don't buy airlines as myself. I've never bought an airline in my life, not only for myself, but neither for our clients. I just don't find them stocks that I want to hold in portfolio, simply because they can be more volatile. But part of airlines, once we open up and we've got permission to travel, though, airlines will bounce back a lot faster than what I'd say cruise ships will, simply because we still need to travel interstate and we still need to do things. And airlines, you might only be on an aircraft for 1 or 2 hours, and then you can get off, but you can have obviously the sanitizers and your masks to protect yourselves. And aeroplanes have the best types of filtering systems that you can get, so it'd be highly unlikely for you to get a coronavirus bug from an airline, basically, in what we're seeing right now. But I'd have to agree with Buffett, stay out of airlines.
There's an old adage that I have seen: sell in May and stay away. What are your thoughts? It's all crazy position as we go into May. What are your thoughts on the adage?
Yeah, look, I think we will have a down May in the marketplace anyway, but it's one of those old sayings. This one goes back hundreds of years, back to, back into the European times, when they were June, July and August are the summer months in Europe, and as they are in the US. And what would happen is people would sell off, go down to their seaside home. They'd sell off their stocks while they're on their summer holidays and come back and buy. But it's been a little bit more evolved, more so in nowadays, or more modern times. What we're seeing it is a lot of the gains in the market, they believe, happen somewhere before May. So you're talking about November, December, January, February, March and April, and then over the winter month or over the summer months things drop off a little bit. So I'm not a big one on those sorts of old adages. I mean, obviously the Dow and S&P rose strongly in April, and I do think it's going to fall away in May. But to me, I think it's just being very, very careful. I'm advising people not to put all of their money into the stock market. I'm saying just go in, if you want to go in, pick some really high quality stocks, some of those top 20, top 50 stocks in the S&P 500. Go in, with half of the money or quarter to half of your money. Don't go in with everything. Now's not the time to try and make all the money. Now's the time to be conservative and protect capital. But as I said, I do expect May to go down anyway and live up to the adage of selling in May.
And what do you see for the upcoming week, Dale?
No, I think the S&P and the Dow will probably trade down this week. After what we saw on Friday, I think we're going to see a bit more of a downward move here, because it really, As I was saying the other week, I thought the market would go up for 1 to 4 weeks. It's done that. It's risen quite strongly. We're well over 20% off the bottom. I think we made over 30% off the bottom, and we haven't had a real test of that bottom yet. And whether it does keep going down and go below the low in March, it's probably a bit too early to tell. We may see this market go up and down, and more of a sideways move over the next 4 to 6 months at this point in time. But right now, as I said, I think I'd be really, really conservative, but my bet is next week it'll be down a little bit. Or this week it'll be down a bit. Sorry.
Yeah. I would have to agree until the white swan appears as some sort of vaccine something. I just don't see us going above where we are right now. I just don't think that the market is attached to the reality. So I will agree with you. Dale, I appreciate your time as always and look forward to talking to you again next week in your detailed market reports coming up. Thanks a lot, and we will see you again next week, my friend.
You take care, Jim. Bye-bye.
Please remember that this report is an educational tool. While Wealth Within holds an Australian Financial Services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as you heard it from Jim and I a little bit earlier in our report here, there's a huge disconnect between what's going on the market and the economic realities of companies and physically what's going on throughout the US in terms of what business is doing and what we can expect. And if you've got analysts out there who are all over the place in trying to figure out where is it heading, where's the market heading, where each stock heading, and where where are your telcos heading, where are your information technology stocks heading, where are your banks heading, and the thing is we don't really know because they're not giving us a lot of guidance, and when the companies aren't giving us guidance, that means they don't really know, and if they don't really know, then this makes this market quite dangerous. But I know a lot of people are out there buying up stocks thinking they're getting great bargains, but what they're actually doing is you might be getting more than you bargained for. So buying a stock because it's fallen heavily over the last month or so and thinking you've bought a stock that's cheap. If it falls below where you bought it from, it's not cheap anymore, and that's the really part of what I was saying to Jim. It's about really just putting a little bit in the market on some really good safe stocks, because I really don't think this market has finished falling. But let's go and have a look at the chart. How's that? So we can have a good look at it. On the left of your screen, you're seeing a monthly chart of the Dow Jones, and we'll just bring that up, and you can see here last month, that beautiful big strong bar from last month, and so far we've had that move down, and we're only a few days into May, so we can't read too much into that. But the big thing is it rose too fast too soon, because obviously this big fall down through here to that low in March, that was 38.4%, and then we can see this market. If I just get rid of that, if from that low you can see, let me put my tool on here. From that low, we saw the market rise up 35.97 to close out last month up 33.67% from that low in March. And you can see if we go and put this thing on again from where it from where it closed the prior month, you can see they're 11% this move. Sorry, that's not quite right, is it? It's on the wrong spot here. Yeah, so it moved up 11%. So what we're seeing here is this month is a bit bearish so far. We'll go to the weekly chart and we'll see what happened last week and why this is concerning. Look at the close here from a few weeks ago, the 10th of April. It closed a little bit higher, closed around the same. It's closed around the same. So if I use my little tool here, you can see the close is all around that same thing. That's a market that's going sideways with no direction, no understanding of where it wants to go. But there's a lot of people out there wanting to buy stocks for some reason. As you can see, it moved here, it moved straight up, made a new high, beat that one. So that was 24,264. It made a high last week of 24,764 and immediately reversed. And we can see Friday's bar here. That's Friday's bar where it just gapped down and traded down. So again, I'm not excited about this market, and I think it is dangerous. I think a lot of people are trying to get profits and try to make back losses and thinking they're smart, I suppose. It's probably way. And one thing I know with 100% certainty is people overestimate their level of knowledge and ability when it comes to the stock market. Whether you're an investor or traders, I find, I've been mentoring traders for a couple of decades. And I know 9 times out of 10 when somebody tells me they're a trader, they're just way under, their knowledge and their skill level and experience is way down to what it should be. And when I start asking questions of them, what do you do? How do you analyse? What do you buy and sell rules? What's your trading strategy? What are your exit strategies? It's very wishy-washy what I get back. And so to me, it's a really dangerous environment at this point in time. I do think the market will go down this week. I think we're going to see a test of that bottom sometime, maybe in the next few weeks, maybe in the next month or two. But again, now the market is not in a bullish mindset. If there's any negative news, it will fall pretty fast, because you got to remember the market goes up in stairs and down in elevators, and this elevator's got the basement button all highlighted ready to go, in my view. And I'm prepared to be wrong. I am really prepared to be wrong, but I'll rather be wrong and the market goes up than be right and everybody stays in the market and it tanks and it goes below the lows of March 23rd. And so therefore I'd rather be cautious and say, look, it's going to go down, it's likely to go down, we're likely to see a lower low, and that will make sure people will make the appropriate decisions. But if I'm overly bullish saying get into the market now, people get burnt. That's a worse sin, if that makes sense. But we've got a couple of questions for this week, so let's get into those now. The first question I've got is from Ross, who says, hi Dale, what are your thoughts on JP Morgan and the Bank of America? So he's into looking at what the financial stocks are. So let's have a look at JP Morgan first, and let me just bring that up. I'll just go down here. So JP Morgan, big stock, looking very, very big stock, beautiful stock, coming off its high here back in January. So it was falling quite early on, wasn't it? It wasn't one of those stocks that waited till March to fall away. And if I use my little tool here, we can see the fall from that January high right down into there. You can see 45. So JP Morgan fell much more than what the actual market did. It's bounced a little bit since then, but it hasn't bounced quite enough. Hasn't been as bullish as what the market is from that low. You can see it moved up 35, closed up 24. So the market is not necessarily supporting this stock at this point in time, even though it's traded higher from that low in March. And we've got a bit of indecision there. But let me go to that weekly chart and we'll see, have a bit of a good look at this, Ross. Again, look, we've had 1, 2, 3 weeks up and sideways. Look, there's not really much. It's still, this is the close from March here, the week ending the 13th of March, and it's way below that. Yeah, it's not looking super strong for me. Not a stock that I would put in my portfolio at this point in time. Next one is Bank of America. You'll find that the financial stocks aren't going to be super strong, and this is really where a lot of people are thinking they might be super strong. I don't think the financial stocks are going to be strong throughout America. I think there's going to be a lot of issues here. There's going to be a lot of issues with housing market. Banks like to lend money, and I think the housing market is going to be hit, and it is being hit right now, but not looking super strong. Looking at the weekly chart, again, not giving me that much excitement. I would have loved to have seen it break above that high and do very well, but it didn't. If you see here, look, that was 25.32. That was 25.11. Remember, looking back at the Dow, it made a slightly higher high last week. This didn't. That suggests it's more bearish. So, but hey, worth having a look at. But there are much better stocks on there. I'd stick more in the technology stocks, like I talk about in this week. Like I think I was talking about that last week. Sorry, some of those technology stocks. Looking at some of those best ones on the S&P 500, your Microsofts have been doing really well. I did mention a couple a little bit earlier on in this report with Jim as well. They're still up, and they're the sorts of stocks you want. Next question we have is from Thomas, and he says, Dale, can you give your thoughts on Virgin Galactic? Thinking of investing for the long term. I know a lot of people, they try and speculate on getting a good stock for the long term, and obviously Virgin Galactic has a lot of let me bring it up here on the screen here, has a lot of media in it, because obviously Branson always attracts a hell of a lot of media, but geez, I think there's much better stocks for you to look at. I really do. I mean, it did take off from around $11 to $40, and it's around about 19. But again, it's about long term, about how much money is it going to make, and we're talking about space travel here. It's very cost heavy. I mean, airlines are very cost heavy, and you've seen what's happened with the airlines. lately, you know, because you only need something to happen. I mean, imagine what happened if you had one accident in space and people died. What would happen with this stock? So you're taking high risk. So if you want to go into a stock like this long term, put a small amount in it. Don't go in with a big position size. Go in with a very small amount. And also invest with the intention that if you lose everything you put into it, that's okay as well. You know, because I mean, you know, NASA's had some. Remember, if NASA's had some accidents, obviously the shuttle explosion, all those sorts of things. You only need one major accident like that, and this thing will blow up. So it is a higher risk stock. So I'd say stay out of that. But hey, worth asking the question, isn't it? I'd like to cover Tesla now. We've looked at a couple of banks, but I want to look at Tesla because I know that's one of Jim's favourite stocks that he likes to talk to me about. And you can see, and Tesla's been on a yo-yo ride the last few months. So you can see earlier this year, if I go back down to that low, that was December 2019, and had that massive rise up. And this is where all the people out there trying to short, and this is what Jim was saying, it should be going down. Well, I went, no, it's going up. But then it just tanked, and if I use my little tool here, you'll see what I'm talking about here. This is really volatile, this stock, and you can see it rose over 195%, only to fall from this high here back in February down to this low here in March. So that was sort of mid-March there, that with that low, the market hit. It fell 62.89%, and from that low to the high last week, it was up 148, closing at 100% up over 1, 2, 3, 4, 5 weeks. A little bit better, isn't it, than obviously some of the other stocks we'd looked at, like your JP Morgans and your Bank of Americas. This looks a bit better, but it's just coming back to a bit more sustainable moves. So keep an eye on this stock at this point in time, because it has moved into, if you look at luxury car sales in the US, obviously Mercedes is number one for luxury car sales. BMW is number 2, Lexus is number 3. Lexus has dropped. So you've got Mercedes, BMW, then Lexus. I think Tesla's up to number 4 now. It's above the Mazda Cura. I think it was a Cura, and what's the other one? I can't remember the other one. There's a couple of them there, but Tesla's moving up. The Model 3 is doing well. They've just got to get production back on again. So keep an eye on Tesla over the next few months and see whether it stabilises where it is and starts to look a little bit stronger. But thanks very much for sending in your questions. I really do appreciate it. If you have a stock or a question that you'd like me to answer regarding the US market, or any other question regarding investing or the stock market, for you Australian people that are watching this report, this is not the place to put Australian stocks. Put them on the other report, because I will ignore them on this one. I'm only looking for US stocks on this report. But if you're in the US watching or anywhere else in the world, just tell me where you are. Say, hey Dale, I'm from, you know, Texas, or I'm from New York, love your report, here's a stock for me. So I'd love to hear from you, love to hear your questions. Remember to hit the subscribe button now, and also click that bell on the right of it so you keep up to date with our videos. Also hit the like button if you like the videos. But we do these every single week. My interviews with Jim, it goes up Monday US time, so just in time for you to give you my understanding. I will be starting to do a live stream in the next month or so as well, where I get live with you. We look at stocks, look at the market live. That's something to look out for. I don't have a date yet, but I'm just setting that up at the moment. It won't be on YouTube. It'll be on a streaming service, so that's not too far away. In the next 1 to 2 months, that'll all be set up, but look out for that. But thanks for watching. Take care. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.